Well, hello everybody. Blair Nightingale here, coming at you Monday afternoon, once again, 4 p.m. Pacific Standard Time. Wherever you are in the country, wherever you're joining us from, welcome once again. We will be broadcasting this live to our friends on Facebook Live as well as YouTube. So whichever platform, as well as those who are joining us by recording at some later date, welcome. If you are joining us live today, as I always say on here, go ahead, drop your name in. James actually just beat me to it. How you doing, James? Glad to see you on here. Just like James did, if you want to join in, drop your name, where you're from, what's going on, and honestly, any questions that you might have as we go along in this broadcast, I would love to hear from you as well. Susan, I see you there. Today, we're looking at the election. We're looking at the inauguration. We're looking at Wall Street. What are we going to focus on specifically about this? Well, really, as I was just starting the broadcast, I thought to myself, the purpose today that I have for you in this material, Susan says, struggling. Okay, trying to let me know if I'm too quiet, if you can't hear me. I will address that if some of our friends out there are having an issue with that. What I want you to walk away with today is, what are some of the things as we go into Inauguration Day, just a couple of days away, that I need to know? And what are some of the things I don't need to know? Okay, one is as important as the other, because when it comes to the stock market, there's all kinds of voices, articles, and sources that are saying, hey, pay attention to this, pay attention to this, pay attention to that, invest here, do this. Everybody wants your attention, which might make you think, well, why should I give you my attention today, Blair? Well, if you've been on these broadcasts, you know what I want to do isn't just tell you what to do, but tell you how you can think better and make better decisions for yourself. I actually want to empower you. So, like I said, the goal today is to really go, what do I need to pay attention to in this time? We get a lot of questions about, of course, the election, but we get a lot of questions about the inauguration and everything surrounding it. What we really mean by that, of course, is the actual inauguration, but really we also mean the transition, right? We're transitioning. We're not just transitioning presidents. We're transitioning parties, right? We're transitioning plans. So we need to look at some of that and go, what should we expect? Some of you are in some investments in the market right now. Some of you are looking to say, should I be getting out? Some of you are saying, should I be getting in? Of course, these are always the questions we have as investors. And really at Tradeway, as I explained last week, as traders, right? As traders. And there is that difference between trading and investing, but certainly everybody on both sides of that equation are asking, what do I need to know so that I can make good decisions? And that's exactly what we're going to look at today. Jeffrey, I see you there. Howdy, howdy, he says. You are loud and clear. Glad to hear it. Benjamin, good to see you on here as always. James, it is an uncertain time. James says it is an uncertain time. You know what? I love that you said that, James, because that's going to start us off in a really great place. Because you know what I'm going to say? I'm going to say I agree. How can I not? Last year was the year we said unprecedented amount of times, didn't we? It doesn't take really me repeating anything about the last 12 months of our lives to support that. James is right. It's an uncertain time. And therefore, certainly it's affected us economically. And then that is going to affect what happens in the market. I think that creates some really interesting conversation, which we're going to cover today, because if the economy has been impacted so much, why do we see the market going up as much as we have? Well, that's an interesting thing I want you to look at. Remember, I'm going to keep saying this. Today's goal, election, inauguration, and Wall Street, is what do I need to know? What's important for me to look at? What's not so important for me to look at? That's the goal today. So it is an uncertain time, but here's something important we need to know. We're never actually certain in the stock market. I'd like to discern, I'd like to look at some things today that help us decide how much risk there is if we are in the market. But I also want us to understand that we never actually know what's going to happen. So there's a certain level of uncertainty that is always present as an investor or as a trader. There's a certain level of uncertainty that's always present. So that's not our issue as a whole. Uncertainty is not our issue as a whole. And many people can be surprised to hear that, because what do we want when we take risk? Well, generally speaking, the degree of discomfort or fear that we have, which a lot of times can just come from the unknown, right? What do we want as an opposite to that? We want to know what's going to happen. So I'm going to tell you some of the things that I think you need to watch. Of course, I've said that a few times. And so I want to get into some specifics now. Yolanda says, uncertain times. What about investing in gold or silver? Okay, so before I answer your question, love the question, Yolanda. Please, anybody who wants to send in questions, go ahead, throw them in. I have no problem with that. In fact, I'd rather see them in there. I'd rather address some of the things that you guys want to talk about specifically. I love this question. I think it's very relevant. I'm going to dive into some of the things that I want to cover, and I think there's going to be a good spot coming up in a little bit where I can come back around and talk about that, because that is an interesting question, especially when we talk about uncertainty. So what are some of the things you need to know? Well, obviously, we're a couple of days away. Today being the 18th, the 20th is going to be the inauguration. So one of the big questions we get is, what should I be expecting the day of the inauguration, right? What is going to happen the day of the inauguration? Or what should I be watching for the day of the inauguration? Now, in my assessment, really, and as a trader myself, the day of the inauguration, it will be a day that I have a little bit of caution. Okay, this is going to be on Wednesday, right? Be on the 20th. So I will have some caution. If I'm looking as a trader, I'm looking to enter a position, or I'm in a position, I am going to definitely exercise some caution, but I'm definitely not getting too excited about it. So I'm not going to pay attention to every article that's, euphoric or doom and gloom regarding Wednesday. I'm not going to get too emotional. And that's the biggest thing I want to communicate to everybody out there today. For me, for us at Tradeway, we're not going to get too emotional in terms of what the market is going to do based on the inauguration. Now, what I think we should watch for, however, I said I'll be cautious. And what I'll be cautious about is there will obviously be a speech. Now, this speech is going to be, sometimes these speeches can take on just more of a formal approach where the main goal, perhaps, for the incoming president is to speak some sort of message of unity, and it will be more, in a sense, theoretical, patriotic, whatever the case might be, less so a platform to announce policy. Now, obviously, the incoming president has announced a lot of policy goals, the first 10 days, all that kind of stuff. That is something outside of the inauguration I think Wall Street is going to pay more attention to. Specifically Wednesday, I'll be watching that speech, or at least news regarding that speech, that surprises Wall Street in any way. See, Wall Street doesn't really like surprises unless the surprise is good, right? They try to price everything in, and they can only price the market based on the information they have. So if we see Biden coming out and announcing something or saying something that's different than he has been saying, maybe something more aggressive in terms of stimulus, maybe something more aggressive in terms of government regulation, whatever the case might be, those are the kinds of things in terms of policy that Wall Street is going to start to go, ooh, that is a piece we care about. Now, they don't care just because he said it, right? Wall Street does not care about news because other people care about the news, no matter how important that news is. They only care about what they feel is going to affect their ability to see the market move up, right? That's what they're looking for. And on one hand, you might think, well, geez, that's kind of cold. The other side of that would be that really the markets work on whether or not the economy is growing, whether or not companies can be expected to grow. If they can be expected to grow, this is a good place for us to invest. So all that to say, I'm not watching to be, overly anxious, overly emotional. I don't have a hard, fast rule that says I have to stay out on Wednesday. More so like I was during the election. That's much more, obviously we didn't know exactly who's going to win. We never actually know ahead of time who's going to win. So it sets us up for what? Surprise, which is what I had just said. This less chance of that happening, but some chance of that happening. So we'll definitely be watching for that. I also want to say, what else is Wall Street watching? So when you go out and maybe you're looking at news or you're reading news, and this is, whether we're talking about the markets or not, this is one of the things, especially with our smartphones, our social media, our access to so much information. It can be overwhelming, and especially coming to financial news. You might be in a position, in an investment, and you find yourself being driven to read article after article after article, but maybe a little bit frustrating because one article seems to say this and the other article seems to say that, and it feels like everybody just kind of wants me to buy some kind of stock or something like that. Just to kind of break it down and keep it really simple, I always look at market news, okay? And this is something we do at Tradeway when I'm assessing what we call market tone, okay? What do I need to know? What do I not need to know? Well, this one's easier in that I find what I need to know in the news and I ignore everything else. Now, I just mentioned the inauguration, okay? So we've covered that. I think that's one thing. It's usually one or two major items. Here's the other one that the market has been focusing on primarily. Now, remember I said the market has been focusing on it. There's a lot of other stuff that's been in the news. Some actually really major stuff been in the news. Hasn't necessarily affected Wall Street. It's affected Americans, but hasn't necessarily affected Wall Street. So we need to go, well, what are they paying attention to? And the other one that I find that they're really paying attention to is a new proposed stimulus bill. Now, the bill hasn't even really been drafted yet, okay? It's not been voted on. It's certainly not law, but there is a new $1.9 trillion stimulus proposal from the incoming president. And that is something that we get to understand this saying. You'll hear our founder and CEO, David Mitchell, say sometimes, this is an old saying around Wall Street, buy on rumor and sell on news. Buy on rumor and sell on news. Now, what does that really even mean? Well, in the context of our conversation, as I watched talk about the stimulus bill, they didn't have a lot of details. Didn't really know exactly what it was going to be or what it was going to do, but there was this expectation. I think Biden is going to pump out more stimulus. The market liked that. Why? More money. It's going to pump more money into the economy. They're not necessarily thinking long term, right? They're not thinking all the way. They're thinking in the short term, or at least the shorter term. And that was exciting. It was emotional. I'm not saying they didn't think it through at all, but it tends to be more emotional on Wall Street. So they bought stocks. Stocks continued to rise based on, in a sense, the rumor, right? More generalized expectation and news around this stimulus bill. Then the stimulus bill actually gets unveiled. Some of the details get talked about. Okay, this is an important process to understand as we look at news. And remember, I'm only focusing on a couple articles here, so this isn't to be too overwhelming. This is just a couple of things around these news items that I think will be very helpful for you to not only pay attention to, but help you kind of sift through some of the noise in the coming days. So then more details comes out about this bill, and that's when Wall Street starts to pull back, right? It starts to drop. Now, nothing tremendous by any means, but Wall Street starts to drop. And we are going to go over and look at the S&P chart showing us the price action in just a minute here. So I'll show you that drop, but it starts to pull back. Well, now why would it go up based on the thought of the bill over here, but then not actually stay going up once we get more details on the bill? Buy on rumor, sell on news. We start to go, this idea that it's going to pump money into the economy is a good thing. But then once we actually see what it is, maybe there's some things in there we have questions about. Maybe there's some things in there we don't really like. Or perhaps we've just already put some money into the market and we're ready to take profits now that the actual news is out. Whatever the case might be, or a mixture of all the above, you see this happen. And I think we need to keep an eye on how do they continue to digest this bill as it actually starts to take greater shape. As I said, it's only been proposed at this point. This is almost a $2 trillion bill aimed at what? Stimulus, which is what? Stimulating the economy. Wall Street wants to know this, guys. Bottom line. The quicker you and I align to this, the clearer things will be. They want to see money coming into the economy, causing companies to grow. Okay? They don't need it to be tech that grows. It can be something else. But whatever it is, they need something that gives them confidence that growth can be expected in a certain area of the market. If they can expect that, then they will buy stocks. And you and I learned in the tradeway system that when the big money is buying stocks, that's what we watch for. Because much like a surfer riding a wave, we're just trying to catch the wave into the beach, right? We don't cause the wave. We're not the wave. We just want to ride the wave. And wherever they're going, that's where we want to learn to go too. That's how it works for you and I, as I've said on here many times, as retail traders. Just reading some comments here. Before COVID hit, President Trump was having trade war with China. Is that resolved now? How do you think Biden would deal with them? Thoughts? So yes, some thoughts and opinions being put out in the chat there. Yeah, I think that's a great question. I mean, I would say that is the continuation of this conversation, right? Once we really get on the other side of Wednesday, we're going to find, especially in the first 10 days, presidents like to come out and just get rocking and rolling in the first 10 days to get policy going. What is he going to turn over, right? Every president I've ever seen, many of you guys have seen more presidents than I have, they come in and they turn back on the clock on some of the things the previous president did. That's almost first order of business. What are those things going to be? That's some space that we're really going to need to watch. And we're just going to need to watch Wall Street. Now, I want to stop for a second because if I keep going here, it might just seem like, whoa, Blair, this is a lot of information. How do I really know, hey, tomorrow morning, Pacific time, my time, 6:30 in the morning, market's going to open. I might be up 6 a.m. with my coffee in hand. I'm looking at my charts. I'm looking at the news. What do I need to know next Tuesday, next Thursday? I want to make sure this is really clear in my mind. What are you telling me? I'm telling you that the main thing you want to watch with all of this transition, okay, is what's happening with this stimulus bill. And does President Biden, make any announcements that cause really sudden changes I should say it this way, that cause a surprise? A lot of these things he's said already, okay? A lot of the things that he plans to do in this initial stretch he's already announced. But are there going to be some surprises? So is there need for caution in this time? Yeah, I think there is. I think there's some need for caution in this time. Now, I mentioned we're going to go over to the charts here in a second, and I'm going to show you how that can help you feel more confident and make some decisions. Because even though I'm telling you we need to be cautious, and when I say that, I mean a little bit elevated caution, right? We're always careful as traders. We're assessing risk and making good decisions. But this is going to be raised a little bit because the potential for more surprises as an incoming president sets the tone of their policy with this great question from Dennis. What's going to happen with China, right? How is that going to affect a lot of things? I already see something. We're getting back into the Paris Accord. So we're going to see some environmental shifts. We're going to see some regulatory shifts. We might see some shifts in energy, right? We heard that in some of the debates. Some of these things are going to shift, but in the inauguration, in the short term, that's the thing I'm watching the most. Is there a surprise coming out of what he says on Wednesday? And really, how are we digesting the stimulus bill that he's already announced. That's a really important thing to watch. Now, there's a couple other things I want to focus on here as well today, but let's head over to the chart. I'm going to pop this guy up on the screen here so that we can look at a couple of things. Here's a principle I talked about last week. Now, for those of you out there who don't know, okay, I'm looking at a stock chart. Each one of these red and green candlesticks, we call it here. Pause for a second. If you don't know what a candlestick is, if you've never seen a stock chart, just remember whatever platform you're on, YouTube or Facebook, you can go back in time on Market Mondays. We've had a tremendous amount of content that we've gone through on this broadcast for you at home for free. I say it all the time. It's my goal to help you win in your finances. That's what I want to help you do. Of course, we focus specifically on trading in the stock market, but that's what I want to help you do. So we've given you a lot of stuff, and we've taught the more, if you will, nitty gritty or details of what we're looking at on a chart. Normally, these candlesticks that we're looking at here are a day. Each one of them is a trading day. The market's never open on Saturdays and Sundays, and they're closed on certain holidays, today being MLK Day. Market's actually closed today. What we're looking at here is each candlestick is 1 month. I've said it differently today than normal because I want to show you something. You look at this, and I want you to catch something really important about this time in our country and in the market, but also something I see a lot of traders doing. Remember I said, I want you to know this is what I don't need to pay attention to. This is what I do need to pay attention to. Everybody out there, especially my note takers, this is something you do need to pay attention to. Okay? I prefaced it. It's on the marquee. You do need to pay attention to this. What is it? We need to pay attention to our tendency as people, our tendency as traders, right? To project on the market what we think it should do based on the conclusions we have about what's happening in the world. We have a tendency as people, as traders, to project what we think the market should do based on our interpretations of what's happening in the world. Now, let me put some skin on it. What do I mean? How did this come into the conversation? Well, I've heard a lot of people say something like, well, and this was earlier, of course, last year, you know, if we get a Republican president, the market's going to keep going up. If we don't, it's going to go down. Well, it hasn't yet. Now, I'm not making a political statement here. I'm just saying it hasn't done that yet. And as traders, anytime we make any assumptions, and this is just one example, and I've done it. I've definitely done it. Your mind, sometimes we don't even notice it. It crosses over and it makes this assumption that if this happens, surely, logically, that means this will happen in the market. But if that happens, surely, logically, this will happen in the market. It'll go up, it'll go down, it'll do this, it'll do that. And then we make investing or trading decisions based on that assumption. And it may not be safe to do so because it's not based on what the price is actually telling us. So at Tradeway, we always come back this place of uncertainty. Several of you have already brought that up. This place of uncertainty. There's always uncertainty. I mentioned this already on some level because we don't know what's going to happen tomorrow. But we use the system that we teach at Tradeway to help you know, oh, there's always uncertainty, but I don't need to be afraid of the uncertainty. And I can successfully learn to identify what are the best opportunities out there? How do I control my potential losses, which is your risk? And then I'm free to trade whenever I want. I don't need to know what's going to happen tomorrow. When you look at this chart, this is on the monthly. We can look at November in election years. Now I could go back. I'm not going to do every one of them. We don't have very much data here, do we? Well, of course not. We just had an election. We don't have much data. Now, it didn't tank. It's been tumultuous, right? No matter what side of the aisle you're on, it's been tumultuous. This is still up. If I go back to 2016, of course, November 2016, it's up. If I go back, 2012, it's up. If I go back, what do we see in here? Well, there's Great Recession. Now, this is interesting. I'm not going to get too far into this today because it'll take up more of our time, and this isn't necessarily the goal of our broadcast today. But 2008, of course, comes smack in the middle of this Great Recession. So we finished that out, and the market, of course, recovered. So that was a unique situation, for an election. But it's not like this thing just toppled forever, okay? Now, again, I'm not discussing the exact policy that happened there, but some pretty big things did change there. So you look at that election, and you just go further back from there, okay? It's not universal that any one party directly, and again, I'm not trying to make a political statement here, although I do obviously believe there are political implications in whatever presidents do and do not decide to do. And I've made some of those personal views known on these broadcasts before. But my goal today is just to say, making an assumption to say, well, it's going to do this, it's going to do that. Well, it have to go a little bit deeper than that. So we just want to make sure, number one, in this scenario, as far as who we think will be elected, we don't necessarily know how the market's going to respond because some other factors are going to come into play. And number two, and I would say even more importantly, we just want to make sure we don't go into that personal bias, which is what it is, where we say the market's going to do this because that's logical, right? Stimulus is going to lift our economy and the market's going to soar. Or regulation is going to come in and it's going to choke the economy and the market's going to tank. Well, let's not make predictions. Let's wait and see what the market tells us it's going to do. Okay. Now I switch over to the daily chart here. And I'm going to stop my share just for a second. Come on back over here. Yeah, Jeffrey says, I was really wrong about what I thought the S&P 500 would look like if Biden won. And of course, we said it's early. And again, we're going to have to watch. But that's exactly it. That's exactly it. And a lot of people in a lot of different places with a lot of different persuasions have been wrong many times, guessing, projecting what the market's going to do at any point. Okay. So that's something that we need to be aware of. I'm going to tell you two more things that I think right now you need to be aware of. One of them specifically about the season that we're in. And then one of them I want to say, because I think it's really important for you to know based on the conversation we've already had today. So let me go ahead and bring the chart back up for you guys. Just so we can tie this part of the conversation off with a bow. You can look here. We're looking at, now I'm back to every one of these candlesticks being a single day, okay? A single day showing the price action of that single day in the overall market. This is the S&P 500 index being shown for you here on the screen. Certainty is not something we have, but we don't go in blindly. Because I'm wondering if there's some folks out there today, I'm speaking to you right now. Well, Blair, wait a second. I identify with what you're saying when you say, if we feel like we need certainty, it can be anxious because how do we get certainty? Or I find myself looking at lots of articles because I want to know, hey, what's going to happen? And I'm trying, and this guy sounds like he thinks he knows what's going to happen, or this guy knows what's going to happen. Well, I would say be very cautious of anyone who thinks they know what's going to happen. Now, obviously, there are some people who say, I'm very experienced, and here's what I think could happen and is more likely to happen. That's okay, okay? That can be okay. But somebody who says, I know what's going to happen, listen, that's not going to help you. I said what you're going to pay attention to right now, what you're not. I would suggest that's a not. We're not going to pay attention to people who say, this is going to happen, especially since, and here's my whole point in this section of our broadcast today, especially since you can actually learn to feel like you are making an educated assessment of whether or not it's a good time to buy a stock, whether it's not a good time. You can make that decision. You can learn how to do that. How could you learn how to do that? Well, look at the chart that we have right in front of us here. You'll notice I've just found a pattern. The stock moves up. Remember I said this is the S&P 500, and it moves back down. And it goes up to that top line, and it moves back down, and it moves up. And we adjusted our lines recently, right? It doesn't always go all the way to that line, but it comes back to this line. It goes up, it comes back down to this line. It goes up. And then just this last week, it came back down to that white line. That's what we call 20-day moving average. We'll teach exactly what that is and how to use it. But it's a line that other traders, including the big boys, remember that big money I talked about, they also see that line. What is my point? I'm saying we actually go in here, we look at price and we look for patterns. And then we go, geez, I wonder if that pattern is going to repeat again. And if it does, we exploit the pattern. Now, you say, Blair, that's a little oversimplified. It is and it isn't. It's a correct explanation of exactly what we do. So in that sense, it's really that clear. You say, well, isn't there some more that goes along with that? Yes, there is. And most of the training that I do has to do with what goes on in the head and the heart, right? Everything that happens between these two lines. So I want to say to you that we're going to watch this market through the inauguration, through the transition, through the unveiling of new platforms and policies. And most of my decisions in trading, when I personally trade the money that I have, right? Nobody cares about your money as much as you. I'm going to make most of my decisions based on what the price is actually doing. Now that is something that you need to know. And I can tell you this, if you learn to do this, it cuts out so much of the anxiety and lack of clarity, because I'm not running to all these other sources to try and figure it out. I can look at the price. I can decide based on what's happening here. This is what I'm going to buy. This is what I'm not going to buy. This is a situation I like. This is a situation I don't like. Is there risks? Of course there's risks, but this helps me to manage them and eliminate so many of the risks that go beyond what I'm willing to do. That's something we want to help you do as well. Okay, so that is a big part of the whole thing I want you to pay attention to. Now, I want to say one more thing. Because I think this is also something really important. What do I not pay attention to? What do I pay attention to? Here's another one. Here's the last one. This is what I think you do pay attention to over the next, well, I'm going to say you're going to want to pay attention to this for perhaps a week, perhaps a month, perhaps a year. We don't know the time frame. I'll explain what I mean, but I think you need to have this on your radar. This isn't news. Okay, this isn't news, but this will be helpful for us to understand traders in general. If you saw last week, I did a broadcast at 4 o'clock on Thursday. Now, this was our very first episode of Stock Talk. We looked at hot or not stocks. I looked at Tesla. I looked at Twitter. Both very interesting stocks. If you were on that broadcast last week, send me a little wave, send me a little hand. Let me know you were on there. I'm speaking to everybody, but let me know if you were on there, because I'm going to go over a little something that I talked about on that broadcast as well. Remember, this is something I think you need to know. We looked at Tesla, didn't we? Now, I'm not going to reteach the whole thing here because, of course, you've already heard it. You can go back. You can watch the recording. There's some good stuff there. Hot or not? Well, I said Tesla was hot. Now, remember I said that doesn't mean I'm saying go out and buy it, but it's without question a very hot stock. Now, something I want to say. Stocks, shares of stock, okay, are like little pieces of the company that you're buying. In this case, Tesla. Do you buy the shares directly from Tesla? No. You buy them on the open exchange. Tesla has already sold all the shares publicly. Now, they have big shareholders. Obviously, Mr. Musk, he owns majority share. There are big shareholders that are still in the company, but they're publicly traded. This is a publicly traded company. So the entire structure of Tesla in essence is broken up into shares. Those shares are traded on the market. We're not buying them from Tesla. Why is that important for what I'm saying right now? What am I getting at? Well, that means that the price of those shares rises and falls based on supply and demand. Supply and demand for what? Supply and demand of the shares themselves, which means something very important. It means that the price of the stock here that we're looking at on this chart, where it's more than doubled, okay, in less, a month and a half, 2 months. More than doubled in that period of time. That's a massive increase. So let me ask you this question. Has Tesla as a company doubled in the last month and a half? Have they sold twice as many cars in the last month and a half that they did at any time previous to that? Are they reporting revenue that is more than double what it was? Is there some kind of indicator that says that the company, Tesla, has doubled its value? Because if the share price can only reflect the value of the company itself, then that must be true. Except it isn't true. It isn't true. And remember, I said we can go into some more of the details of this on the other broadcast for those of you that are interested by that. But here's why that's important for you and me. Anytime a stock price gets really far, I say it like that on purpose, really far from the value of the company currently, we're getting into what we call bubble territory. It's a bubble. Now, bubbles break, bubbles burst. You say, Blair, are you predicting that a bubble is about to burst on Tesla? No, I'm not. But I can tell you this, investors are going to be watching Tesla very closely to see, hey, are you even looking like you're going to come close to selling enough cars to justify these extremely high prices? Because what happened in here, guys, it started going up, and I guarantee a lot of people started buying the stock, not because they thought Tesla was growing, but because the stock was going up, and they wanted to ride that train up as well, which only did what? Poured more money into the stock and drove the train higher. Now, I'm not saying there's not institutional money in here that have long-term projections based on a lot of data. I'm sure that's true. In fact, it would be true. But this run can sometimes be hysteria. It can be detached from real economics because it's just free market buying and selling. Now, I'm not saying it's bad. I'm saying for you and me, we need to be aware when that happens, because if the bubble bursts, listen, I don't want to be attached to that, right? I don't want to hitch my wagon to that star, as they say. So why do I say all this in the context of the market? Well, again, I'm not going to make predictions here, but there are some starting to talk and say, we need to see how is our economy really going to do in the next little while, because prices right now of this, let's look back. Here's where we were before we dropped. Okay. This was the strength of our economy, President Trump in February of the beginning of 2020. And of course, we can see right here, it's very stretched out. There's the drop, right? Shut the whole country down. Fastest drop in history, right? But then we recovered. And here in the summer of last year, we actually went to new all-time highs. So let me just ask you a question. Is the market right now, back that up, is the economy right now significantly stronger than where it was before COVID-19 hit the United States? Of course, it's not. Or we wouldn't be talking about a $1.9 trillion stimulus bill. It's not. So we need to be aware of that. Okay, that's a bit strange. What's the reason though? Well, there's lots of reasons, but we're pumping money into the economy. We just keep pumping it in there. And as long as that happens, Wall Street's willing to buy. That's a slippery slope. Does that mean Blair's not going to be trading at all until he knows exactly what's going to happen? No, that does not mean that. In fact, I plan to be more active in my own trading this year, given the right opportunities, than I have been for some time. So I'm going to go back to using the system that tells me when to get in and when to get out. And I'm not going to worry so much about that, but I am going to be aware of it. I am going to be aware of it, and I am going to allow it to guide me when I decide how much am I going to risk this year. Okay? And that gets into some of the things we talk about with our students. How much am I going to risk on every trade I do? Right? What kinds of trades am I going to do? Things like that we talk about all the time. But this is the nature of a bubble. It's good, something for us to know. I'll finish with this. It's just a good thing for us to know. I mean, when we go back to our monthly chart, I showed you guys back here. What was this? .com what? .com bubble, right? What happened? All these companies online were selling stock. Many companies, now I don't mean this was across the board, but for those of you who remember, many companies were selling shares on Wall Street that were going up, 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 and the company wasn't even making any money. At some point, it became this open market hysteria. And once that started to drop, the bubble burst and down it went. Okay, 2008, 2007 is a little bit more complex than that, but these are bubbles. These are bubbles. And I want you to understand the concept and also just know, well, there's risks. When things go up, 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 that means there's risks. Learning a system, knowing when to get in and get out, even if it goes against you. The more you trade, the more trades you're going to have that go against you. That's not an abnormal thing over here at Tradeway, because we know that a good trader sees that happen, but we know what to do when it does. This is what I think you need to know, and some of what you don't need to know, or at least what you don't need to pay attention to, because everybody's going to wave their hands and say, you need to know what I think you need to know. And when I say that, I specifically mean you need to buy this. You need to do this. You need to get into that. You need to buy this stock. You need to. I'm telling you, here's some things I want you to watch for. I think it'll help you make better decisions. I think it'll help you make some decisions for yourself, sift through the noise, understand a little bit more of what to do. Dennis says when stocks are overextended, like Tesla, really makes me uncomfortable. But if the trend continues, I still trade it very cautiously. In this case, he's using one of our options strategies, using a debit spread. He gets in, he gets out quick. Dennis, that's an example of what I'm talking about. Because my caution in saying something like that on Tesla is to say that it won't continue to go up, or it wouldn't be a good stock to trade for some of our students. And in this case, Dennis is just describing some of his experiences in Tesla. You could come back to me in a month and go, Blair, you talked about Tesla back in January, and look, it's only done fantastic. You were wrong. Well, first of all, I'm not predicting that it's going to crash, but it does mean that you can manage your risk, and it may continue to go up. And Dennis's comment here is so great because he's saying, I just trade it very cautiously, right? And there are some ways that I help students trade more cautiously. One of them, I'll tell you right now, is put less money in. You can still trade it. Just put less money in, right? You don't have to load up, as we say. Adam says, would it split again before a bubble burst? I don't think there's any, as far as I've seen, no news on Tesla at this point in time regarding another split. I mean, you never know. They get high enough again, they may split again. That's what companies do. But that's a big decision on their part, and we'll have to see what they decide to do. But again, we're going to have to watch. Bubbles really happen when price extends beyond fundamental value. And what investors have done, and I'll close with this, what investors have done on Tesla and have done on many other stocks, especially tech stocks, is to say, we know you're not worth what the share is worth as a company right now, at least not on the books. Remember, I talked about this more on my Stock Talk class. But we believe that in the future, the growth that you are going to have, that we believe that you are going to have, is worth the price that we're paying right now. Okay? So they justify it. Now, if Tesla does in fact grow significantly like that, then it won't burst. It'll hold up. But you have to know that the farther apart those two metrics get, the more potential we have for a burst, because it's just so far. And you can go back and you can watch that class to let you know, hot or not. What did we say? We talked about Tesla. We talked about Twitter. I'm doing these every Monday right here. You will see me back next week at the same time so I can see you. You can see me. We can talk stocks. That's what we're going to do every Monday. Also, I'll be back on Thursday for another hot or not. That's what we'll be doing on Thursday. Dennis, thank you so much, sir. James, Jeffrey, everybody else who's joined us on there. Hey, like it, share it. Ring the bell if you're on YouTube. Subscribe. You'll be able to see any updates if you go to Tradeways YouTube and subscribe. Like us on Facebook. Again, we will give you updates. You'll never miss anything. If there's somebody out there you think maybe needs to hear this, see this, like this, send it on over to them. We'd like to help them out too. We've got a couple of things coming up at Tradeway. If you want to head on over to tradeway.com, dive deeper. I've had some questions. People have reached out to me. They said, Blair, I've been watching your broadcast. How do I get started? What do I do? Head on over to tradeway.com. We've got a special live event coming up with David Mitchell, our founder and CEO, and one of his very good friends, very successful entrepreneur, Myron Golden, the best speaker you've seen or never seen. I promise you that. You don't want to miss that. That's coming up in February. There's some information about that there as well. Also, our introductory classes for those of you that want to get started. Oh, Jeffrey says, Wednesday? Are we not on Wednesdays? We've changed it, where we're going to do the Stock Talk on Thursdays now. So Thursdays is going to be our regular day. I said some new things were coming. I mentioned, I'm pretty sure on a previous broadcast, I am actually in Los Angeles, California right now. I will be moving back to the great state of Texas in just a few short weeks. So we're going to have a little bit different going on when I get back there as well. It's going to be good for everybody. I promise you, we're going to another level. That is a promise. So that said, I will see you guys. Head on over to tradeway.com. Lots of good stuff going on. Don't miss that event with David and Myron. It's for 2021. It's to give you vision. We want to have strong vision. A strong yes is a strong no. It empowers us. The purpose of this event is to give us a strong yes. So we'll see you over there for that. That's in February. Let me know if you need anything else, guys. Thank you so much, and we'll see you on Thursday.